Canada might be becoming the 51st state, huge tariffs coming through, and fixed rates are up even though interest rates are coming down. 2025 is going to be a very interesting year for Calgary real estate. In today's video, we're going to be covering Calgary real estate market performance predictions for 2025 and how tariffs could sideline a ton of buyers and throw off real estate prices completely. Calgary's December sales hit 1,322 units, and yes, that's a 3.5% dip year over year, but keep this in mind, sales are still 20% above the historical average. It's not the frenzy that we saw in 2022, 3, or even 4, but markets are still healthy and sales are way up. The benchmark price in Calgary is $583,000, and that's up 3.5% compared to last year, but down almost a full percent month over month. That slight dip could indicate stabilization, but it is definitely a trend that we need to keep watching. Here's where things get interesting. Inventory is up 38% year over year. More listings mean buyers have options, but sellers now face stiffer competition. So you're gonna see a lot more price drops hitting the market this year. Let's break these numbers down and what does this all mean for you? If you're buying, you've got choices and you can take your time. If you're selling, it's time to be strategic. And if you're investing, stay tuned because the opportunities are nuanced. Our population growth has slowed down. According to the Edge Analytics report, Canada's population growth slowed almost 0.5% in Q3. That's the lowest that we've seen since 2016, excluding 2020. Temporary resident outflows are up, with 660,000 people leaving the country in this past year. But here in Alberta, we continue to defy that trend with nearly a 4% population growth. That is the highest in Canada. But why? Firstly, interprovincial migration. Alberta's affordability is drawing people from Ontario and BC, where insane home prices are pushing families out. And frankly, I'm shocked we aren't seeing more people leaving expensive cities like that. We still have a pretty healthy job market. Alberta's oil and gas sector is still a steady job generator, and we're attracting workers nationwide. This migration trend is crucial for Calgary real estate. More people moving here means sustained housing demand, even as national trends soften. But here's the catch. The federal government is trying to reduce non-permanent residents by 900,000 over the next 2 years. If successful, this could slow down rental demand and entry-level home sales drastically. Let's take a moment and reflect on what a 4% population growth actually means. If Alberta were a country, its population growth rate would rank second in the world behind South Sudan. That's massive and underpins a strong demand for housing across the province. But as an Albertan and someone who has lived here throughout multiple booms and busts, it has been a concern in the back of all of our minds. Here's something interesting. Interprovincial migration often means different cultural and economic impacts on a city. From 2017 to 2020, I had almost zero tech industry clients moving to Calgary. But between 2021 and today, at least 40% of our buyers are now in tech or finance, and we're slowly starting to see Calgary evolving into a multi-industry city. Calgary condos and rentals are a market segment that might see the most amount of change in the next 2 to 5 years. Calgary's condo market has been a go-to for affordability for years, but now the rental market is facing some challenges. Rental apartment vacancies increased from 1.5 to 2.3% last year, despite record population growth. A lot of that just has to do with supply. Over 140,000 purpose-built rentals and condos are in the pipeline nationally. Once these come online, vacancy rates could probably double or triple, especially if population growth slows further. For investors, this could mean more competition in the rental market and potentially lower rents. But if you're strategic about the location near transit, schools, major job hubs, your investment can still thrive. But if you've seen any of my old videos, you know what I'm about to say. If you're looking for a long-term investment, this is not the market to buy a condo. Let's dig a little bit deeper, because with a potential 6% increase in rental stock over the next 2 years, we could see national vacancies rise significantly. When we take a look at the historical data, similar surges have coincided with economic downturns, so this is going to be a crucial trend for landlords to monitor. Here's a quick story for some context. Imagine that you're a landlord who bought a rental apartment property back in 2023 during the peak of demand here in Calgary. You're now seeing more and more competition with newer, shinier units popping up nearby. How do you compete? It's all about the value add. So now you're gonna have pet-friendly policies, inclusions, lower rents. Anytime that we've seen an influx of listings or rentals hit the market where supply outpaces demand, prices go down. Toronto just went through this, and if our inventory outpaces demand, we're gonna see the same thing. All right, quick pause on this video. Listen, before I say anything, this isn't coming from me, this is coming from the entire team. We need more subs. A lot of our viewers are still not subscribed, so please like, share, and comment below on the type of content that you'd like to see next. Tariffs might be a potential game changer, and not a good one. If these 25% tariffs come into play, Calgary's real estate market could feel the ripple effects immediately. Higher costs for construction materials and goods could push home building prices up, limiting new supply. Inflationary pressures might force the Bank of Canada to raise interest rates again, and that's bad news for affordability, that's bad news for all of us. Calgary's economy is tied to oil and gas. Tariffs could dampen investment in this sector, affecting job creation and housing demand. Here's an example. When we had previous trade disruptions, the cost of lumber spiked by 30% in less than 6 months. Imagine what a similar scenario could do for Calgary's construction industry and the availability of new homes locally. But honestly, it's not all negative. Tariffs could also push innovation and local industries. Builders might explore alternative materials or prefab solutions to cut costs. We've seen this in Europe, where high demand materials cost led to creative, sustainable building methods that eventually reduced the prices and boosted local economies. The Edge report shows a 51% year-over-year jump in mortgage originations as of October 2024, and that's driven by renewals and new buyers. Variable rate originations surged by 169%, making up 20% of all new lending. But there's a twist. HELOC balances saw the largest monthly increase since 2012, and this could signal households are borrowing to cover living expenses, a potential red flag for the financial health of Canada. Mortgage payments on a typical home in Canada are up 75% from 2021 levels, even with recent rate cuts. Keep in mind that a lot of the homeowners who locked in ultra low rates in 2020 and 2021 are going to be facing significant payment shocks when their mortgages are renewing in 2025. A 35% increase in monthly payments is expected on the average, and that could create a lot of distress in the market. For first-time homebuyers, this means careful budgeting is more important than ever. Use online calculators to understand your post-renewal payments. And remember, pre-approvals are your best friend when rates are this unpredictable. And please, don't max out and purchase at 100% of your pre-approval. All right, let's take a look ahead at 2025. Here are my top predictions. I'm expecting a 3 to 5% increase in Calgary's benchmark prices, so we should be hitting the $600,000 to $625,000 range by the end of the year. Appreciation is slowing, but the market is still busy. Rising inventory will ease the pressure on buyers, and it's creating a more balanced market. This means fewer bidding wars and more room for negotiating, and not as much panic, which makes the process easier for all of us. As new rental units come online, vacancy rates will climb and rental prices may stabilize or dip slightly, which again is great for local economy and rents. Federal immigration reforms could dampen entry-level home demand, but may stabilize the rental market. One bold prediction that I have is that we actually might see Calgary's condo market outperform detached homes. The reason for that is affordability remains king, and condos offer an accessible entry point, especially for newcomers to the city. For buyers, inventory is rising and competition is easing, but don't wait too long. If rates climb, affordability is still going to get worse. Focus on areas with strong fundamentals like transit, access, and schools. For sellers, price competitively. With more listings on the market, overpricing will hurt your chances. Early 2025 might be your best window to sell before the market becomes more balanced. For investors, pay attention to vacancy rates and rental trends. Focus on high demand locations to minimize risk. Long-term, Calgary remains a solid investment. From population trends to tariffs and mortgage updates, there's a lot to consider. Whether you're buying, selling, or investing, staying informed is your greatest asset.